Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. I'm Spencer Israel, as always, joined by Joel Elconin and Dennis Dick. On the show today, we've got some earnings still trickling in. Costco, Adobe, Oracle. The shipping stocks moving this morning off of some news of a 5% stake by Morgan Stanley in DCIX. Gordon Johnson downgrading CSIQ this morning. That is the one solar stock he had previously been bullish on. So we'll talk about that and more. We'll take your questions from our chat as always. Joel, how's it going this morning in the S&Ps?
S&P futures by the dip, trading up 6.75 at 62.75, right off the highs of the section of 63.50. Old-time closing high would be a target 69.25. That was your close on Wednesday. On the downside, we took out, now we didn't quite take out, the lows from Thursday, matched the lows from Monday. That's your major support, 51.75 to 52.25. Wild week for crude, but all said and done, we're trading up 16 cents at 57.24. Let me take a look at the daily chart in the crude, and what are we looking at? Not just kind of in the middle of the range for the week, maybe middle of the range for 50% retracement from 59.05 to 56. Gold continuing to rally, up $3 at 12.60.40. Silver over $16 at 16.02.5, up nearly a dime. And Dennis was asking about the price action in Bitcoin, and it is hanging in the $18,000 handle, $18,022.80. That's up 8%. Ripple is up 33%. That's only trading at 80 cents. Ethereum down 7%. Dennis, how you doing on this Friday morning?
Tired. One of those Fridays. And the Triple Witch has snuck in on us there because it's an early one. 15th.
Well, the Friday the 1st, the 8th, the 15th. So there you go. But the volatility, I mean, it's just not like the good old days, Dennis. It's really been muted action. I think people are unwinding Wednesday, early Thursday, late Thursday. Really haven't had the fireworks, that you used to have on these. Well, it's actually a quad witch, right? Because it's December.
Yeah, it is. But we don't acknowledge those stock futures. Right. So we just stick with the Triple Witch.
Okay. All right.
Me and you anyways don't acknowledge it. So we still call it Triple Witch. We're old school there. And all that means is it's the day, it's the third Friday of the month. So you have your regular equity options expiring, but you also have your futures expiring as well. We know we have the contract roll. So this will be the end of the quoting. Is it the Z?
The Z is off the board. They actually do that the Wednesday preceding the Friday of the expiration.
No, but they launched the other one. They take the Z off the board.
No, Z goes off the board today.
Yeah, that's why they expire today. So Z goes off the board, and but you start quoting the next contract of Wednesday prior to it. And so what you have is, March. Anybody that's got these expirations got a roll of contracts. If they've got option positions on stocks, they might be selling the stocks against their option positions or buying the stocks against their option positions. So what you have is a lot of times on the close some wild action, simply because you've got institutions that are jockeying the stocks against their options, and that can push prices in one direction or another. Historically, I've been upright trading for 18 years. This is, usually the third Friday of the month is our best trading day of the month. But like you've been saying, the action has been very muted lately. And really these days have been crickets more often than they've been fireworks. But, I can remember back in the day, it's like, the third Friday, you're counting down the days to get there because you knew there was going to be some major action at the end of the day. Sometimes a stock, I can remember, getting short like a stock like Johnson & Johnson, gapping up $1 on the close. When your stock's gapping up $1 on the close like Johnson & Johnson just off of order flow, those often pull right back in. And, and obviously, you're just fading the close, shorting into the close, get the closing print. A lot of times, even after hours, you can cover quickly or you hold till Monday and it comes back in the buck. So you just don't see those fireworks anymore. I know Jimmy A was trading those quite a bit there back too. So if he's in the chat, maybe he's got some stories as well. But those were always my best trading days, were the third Friday of the month, and it's been quiet as of late.
Yeah, so let's move up. We have a lot of stocks moving off earnings. Let's cover the earnings to start with.
Yeah, we had about 4 pretty solid reports there last night. Well, some solid, some not. I'm going to take you to the not so solid report first. And is this not always the case? It's like Groundhog Day in Oracle. It seems like and we talk about this on the show. We've been talking about this on the show for 2 years. It seems like Oracle runs up in earnings, and doesn't it always disappoint? Give us the numbers, Spencer.
Oracle, Q2 adjusted EPS of 70 cents, which is a 2-cent beat. Sales of 9.6 versus $9.57 billion. So a beat on the EPS, a beat on the sales number. $12 billion buyback plan, they added to that. And on the conference call, they said their Q3 EPS guidance is going to come in a little bit light, and their cloud sales growth will grow between 21 and 25% for the quarter, which is cloud sales is like the thing that everyone wants to see. So
it definitely happened last quarter. I mean, you can see it back in September, the huge run up ahead of the earnings report, and then kaplooey, the stock falls $5. Then it runs up a little bit in October, gave a blot back, and then actually tested those lows as early as December. But then we decided to rally $2 into it in the last week and a half. And the number's not good enough here. And again, Oracle disappoints the street. I mean, there was a one quarter there a few quarters ago that actually did beat and rally. But for the most part, it seems like, it's 8 out of 10 times in Oracle reports, it's lower the next day. So, the trend is your friend, I guess, on that. And if you were doing that and shorting Oracle at the close, good job, because you already be up $3 here this morning. I actually shorted it after hours, but the scalper blood me. So it reported, and I was like, that report's not that great. And it was just hanging out between 50 and 50.20 forever. Finally, it takes out the 50 buyer. There's like an iceberg buyer. And then, so I got short, I think around 49.90, just as it got through it. So I got short high. And then it started coming in. It's coming in. And then it bounced around a little bit. And if you show the after hours chart, scalper blood and me, it got down to 49 and then it was bouncing around. So I ended up covering the lower 49s. And then I watched it go through 49 through 48, down to 47. I'm like, scalper blood. Got to 46.72, I believe. So I left, so I take about 50 or 60 cents on the trade, and I leave about $2.50 on the table.
Where did you get shaken out? Where did you get shaken out here? I can't. This is a 5-minute chart. Where did you get shaken out?
What gets shaken out? My P&L shakes me out. So it's the scalper blood in me. I've, played market maker all those years, scrounging for nickels. So I get 60, 70 cents on a trade. It's feeling pretty dang good. I'm looking to book it. So It was this widespread, Joel. It was trading like within a 30, 40 cent spread, still digesting the report. Let me look at the chart too, because I haven't even looked at the after.
I mean, why don't you at least go on the offer? Go on.
Why don't I do what?
If you're short, go on the offer with somebody. And if you're on if it's a wide spread and you're on the offer and no one's lifting you, then it's going down. If I'm not
offers are getting lifted. You might not see it there, but there was stuff. It wasn't just straight down. There's 20, 30 cent pops.
I gotcha.
So it looks red, but there's literally, it trade down to 46.13, then trade all the way back, or it trade down to 49, like 10, and trade all the way back up to 49.50.
I see it.
So there is some chop in there. So it looks like it's smooth, but there is 30, 40 cent chops, and they're all the way down. And that's just basically a spread trying to figure it out. And you don't know, like you're looking at it and you're like, is it that bad? And you're sitting, boom, you don't look a gift horse in the mouth. It was a good, the trade is, and I've always been very good at this, and I'll pat myself on the back. I'm very good at entering the trade. I have always exited the trade poorly. And a lot of that is simply due to the fact that I have too much market maker in me. Too much, like all those years scalping for pennies or nickels. And, when you get a good move of 50, 60 cents, it feels like a home run. Yeah. That's not a home run to a swing trader, but to a market maker, that's an absolute home run. And I know it's earnings and it's risk, so, you should be trying to make more, but it's so hard when you scalp for nickels for 15 years of your career, and now, I'm trying to take more out of trade earnings events, 2-3 years. It's hard. It's hard to hold on. So let us know, chat, if you guys struggle with the exits too, because I could write a book, on entering trades. I'm one of the best. I'll give myself credit there. I'm very good at identifying. I think Ace has said this before too. He's very good at identifying the entries too. Exits are tricky. That is one of the hardest parts. And I'll tell you, I am not good at all at exiting positions. If I was good at exiting positions, I'd be retired by now because I'm good at entering. I'm good at seeing the setup. I'm just very poor at exiting positions.
Just real quick, could you walk us through like the report and your analyzation here? Because it's a 2-cent beat, right?
Yeah.
Which is good.
Yeah.
And it was a slight beat on revenue. So, and then
I didn't think it's good enough. That's what it was. I'm looking at it. I'm like, that is not good enough because they wanted the tech stocks to blow it away. And it isn't, it's not like a Adobe, which we're going to get to in a second, these tech stocks that have been running. But I just didn't feel like, I felt like I'd run up. I was already biased going in. I'm like, I think Oracle really needs to blow it away to go higher. And I've seen it so many times sell off after earnings. So I'm biased to sell it. And then I'm looking at a 50 to 50, 20. There is 2 icebergs there. What an iceberg order is a big fish, a big institution that's showing 100 shares on the bid, and he's bidding 50. And there's another institution showing 100 shares in the offer off 50, 20. They're lifting the 50, 20s. It's not moving. They're hitting the 50s. It's not moving. I'm like, I'm going pretty much with the winner at that point in time because I can see, this, I don't know how big the order is at 50, 20. I don't know how big the order is at 50. But in any regard here, whichever it takes out, it's probably going to be a path of least resistance all of a sudden. So it takes out the 50. I hit the 49. I can't remember exact price. I think I might have got 94.90 or something like that. But I hit upper 49s because it had taken out the 50. And then offers start coming down. And it was the right trade, right away because it starts going down immediately in my favor. Chops around there, 49.75 for maybe like a minute. Then it's down 49.50. It's chopping all the way down. But, and I eventually got down to almost $49. And, then it chopped around a little bit more. It chopped enough to shake me out in the, 49 a quarter or something like that. And maybe 49.30. And then, and then it continues to go down.
The buyback didn't shake out?
Did
the buyback shake yet? I mean, because that came out 6 seconds after $12 billion buyback plan. That didn't, No.
I already had that information. So I didn't trade it on the initial, I didn't trade in the first seconds.
Okay, I got you.
So I could see the buyback, but it wasn't, and that has been moving. I just had it in my head already that the numbers weren't good enough, and they're always biased to sell at Oracle on earnings. So I'm all about, it's a little bit of, just looking at quantitatively, what have they done here in the past. And I know from Oracle, I traded almost every report. I own in my investment portfolio. So, that's a side thing, but, day trading and investing are 2 completely different animals there. But I'm already looking at it at that point in time, thinking that I want to short the stock. I've got an iceberg of 50-20 that I'm basically leaning on. So if it starts taking out the 50-20, then I'll be like, okay, I need to get the hell out of here because now it can go higher. But it never took that 50-20 iceberg out. And it's just like old school trading then. You're leaning. It's a 20, 30 cent lean. So you got to lean a little ways, but 20 cents at that time if you're going the 50 to the 50-20. And what I mean by leaning is you're looking at that offer saying it's going to take a lot of money to get through that probably. If it takes it out, then I'm going to cover. So that's a consideration. A lot of thought process goes in. Spinner says, do I set a price target after entry? Sometimes, but it all depends. My style of trading is completely different than most people who are going to listen to the show. Right now, I make on average 50 to 100 trades a day. So, a lot of guys, swing traders, are trading 2-3 times a day. I make on average, back in the day, there would be some days I would make 1,000 trades. I'm not joking. I'd make 1,000 physical different trades when I was playing market maker role. And I had some automated software going, so it was trading. So I had literally 2 trading accounts back in the day. One was almost completely automated. So, back in 2005, 2006, 2007, before High Frequency Trader, I was basically one of your first high frequency traders. That's why I know so much about it. I know the systems. I wasn't operating in milliseconds because you didn't have to back then. But Bright Trading was the firm that basically came up with a lot of these strategies. And not that we were the only ones, but there was definitely a lot of other firms as well. But we were one of the first guys on it as well. But then they just sped it up. It got the payment for order flow, and that's where all your market makers come from now is with PFOF, which is completely something we can't participate in because you got to have a retail broker to sell your order flow. So, it's a different game. So that's why we've moved away from market making roles. And most of our guys are doing statistical arbitrage now, not so much arbitrage. But, so it's a different style of trade. You make 100 trades a day. You're not sitting there watching it for 80, 90 cents. I don't have time to sit there and watch one trade and, exit it perfectly either. So it's a little bit to do with that my exits are poor is because I have so many damn positions on. And you can say, well, why don't you just go down to 3 or 4 positions? Because if I'm making a nickel or a dime on 100 positions, then, or, and I'm not going to make a nickel or a dime on 100. You're going to have some losers in there too. But, there's a lot of money to be made on small profits as well when you're trading that.
Let me do a quick technical here. Oracle, if you've been waiting for this gap fill since June 21st, you got it. That high that day was 46.54. The low the next day off an earnings report with 50.16. It's taken 6 months, but we filled that gap. So that is an area that I would look at. I mean, a gap fill. So short term, that's good support. The low on that day was 46.08. But if you go to the longer term chart, the monthly chart here, taking out this 47.50 is not a good thing here. That had been holding up monthly lows for 1, 2, 3, 4, 5, 6 months lows. So, there's your numbers. 46.08 if you take out the pre-market low. 47.5 was a long time monthly low. The only thing, if you're shorting it there, you got a big gap up all the way to 49.94. But 47.50, this needs to recover that level and hold for this to go back up. But there is your numbers for Oracle.
Jump in the other one. So I did not have a good, I made some money on Oracle, but then I got shopped around in Costco. So I had bias to sell Costco into the report too. Why? Because it had run up into the report so much, I thought they needed to blow away. Spencer, give us the details. I'll run you through my trading.
Q1 EPS $1.45 versus $1.34, so a nice 11-cent beat. Sales of 31.12 versus $31.49 billion, so a slight miss, but basically flat on the sales number. Q1 comps for Costco up 10.5%. Membership fees were up 9.8% for the quarter.
So this was one I got, it's going up. And, Joel, you hit me on the head for this a lot of times. And, just going back our background, Joel was my trading supervisor for basically at Bright Trade and at Bright Trade back in 1999. So Joel actually taught me a lot of my stuff. And he'd hit me on the head for this one. But Costco, I had it biased as well that I think they could turn around and sell this on this report. I read the report. I was like, it's pretty good. But then it started rallying. It got up to the 190 area. I was like, I'm looking at those couple highs at 190 and show the after hours chart. And I'm thinking 190 is going to hold. Well, I shorted at 190. Well, just in front of the 190, like, because I always get in front of the numbers. So I'm going to short at like 189.90 or something. And then it starts going through 190. And then it trades that blip up to 191. And I'm like, ugh, I was shorting on the way up. You shouldn't short them on the way up. You should short them on the way down. He comes back and starts chopping around at 190 again. And I was like, I don't know. And I just cover it. Scratch. And then I watch it fall $5. And I'm like, ah! So anyways, what I did wrong, and it's good, and if you don't want to, I'm just telling, different trading stories because I think, there's some value in learning from somebody else's mistakes. I've been in the game for 17 years. I still make lots of mistakes. And I always think you get more value from listening to somebody's mistakes than you do from one of their good trades. So that's why I like to talk about mistakes every once in a while too. What I did wrong, again, was selling it when it was going up and not waiting till it was coming down. The Oracle I did right because I waited till it started coming down. So anyway, I scratched a trade that I should have made money on. And if I would have did it on the way down, although it's sometimes harder to get short on the way down, I probably wouldn't have got shaken out of the trade. Now, would I made $5? No, because the scalper bled me, but I might have made a couple bucks on Costco because $190 stock. Anyways, goes down like 185 and then starts coming back up. And then there's guidance. And I was like, well, it gets back up to that area. I'm going to short it. And I do again. And then it continued higher. And I ended up scalping out of it pretty good. I ended up losing $1, but it could have been worse. So anyway, I got chopped around a lot in Costco. So it wasn't that fun of a night. I made some money in Oracle, lost money in Costco. It is what it is.
Former all-time high, 191.22. We are eclipsing that in the pre-market session, trading at 191.99. No quit in this chart here. Look at your half and your whole numbers coming back on the downside. I mean, 191.22 could be a target for short. I don't think I'd be looking to go long if it came back down to that area. Just a big move here, up 7 points off the lows. One of these stocks, look at your pre-market high. Look where this thing opens. If it goes through the pre-market high, 10, 15, 20 cents, then you could continue to keep going. I like Costco, spend $300 to $500 every time I go there. And a membership thing, I think that's something Wayne and I wrote about a while ago. That they increased more stores, increasing membership, and who cares about Amazon?
Count me in. I'm a member.
You're a member now?
Yep, as of like last week.
Yeah.
You know what they dinged me on though, and they conned me into this, I swear. I went to that upgraded membership because you spend so much money here. Let's get you to the upgraded membership. So I went from like $49 to $135 membership. And I don't know, I can't believe they got me on this. And then, because they're going to give you 1% cash back if you do this. Did they ask you about that too, Spencer, when you were signing up?
No, because I just looked online and then I knew I wanted the basic one. So
yeah, so I do spend some money there, but then I'm looking and analyzing. I was like, I don't know if I'm going to get there. Anyways, they say it's risk-free because if you don't spend the 1%, like, so it's an extra $70, and if you don't spend, I don't know what it is, 1.5%. You don't spend the amount to get there, they'll cut you a check at the end.
Defining his risk reward on a Costco.
So yeah, that's what it is. They give me risk return, and they say your risk is 0. And I'm like, I like zero risk. I'm a trader. I like zero risk. So I upgrade and they get an extra $80 from me. And the time value of money from there I didn't consider either. Although time value of money is pretty low.
Dennis, I get a nice check. It's worth it. We have it.
You have the upgrade membership?
Yeah, we get a check for like $120 or something.
So you think it's worth it?
Yeah. I mean,
I don't know. I said how I'm tracking, and she says, you're tracking not bad. I asked him how, because I got to know. I asked him last time Costco, go, where am I on these purchases? And I don't know. I need to spend like an extra $1,000 here in the next like 4 months to get there. So I don't know. We spent a little bit of money there, but we're not huge Costco shoppers. So I don't know. It's going to be close.
All right.
The trader in me, Joel, and you just want to talk about me, trading stories and like stores and stuff. Joel, everywhere Joel goes, you go to a ball game with him, he's, betting on what the average is going to be after the guy gets the hit. Is it going to go up to 820 or is it going to go up to 230 or down to 225?
We're pretty close.
The trader in Joel's way worse than the trader in Dennis.
All right. Just real quick.
He changes the subject as quickly as he can.
Going back, well, the revenge trading in stores doesn't work either. But
I know you have a bad experience and you go short the stock and then you get dinged again.
Right. I just wanted to square. We get on chat. I mean, this thing is holding, and I think we did give a good setup from yesterday. We were talking about that, those two lows there. And it did hit it, and you got a nice trade. But the thing that's concerning me about Square is he's getting these pops off this support, but by the end of the session, it's settled, closer to the lows, 37.01. I mean, it was still up $1 on the day, 50 cents off the high. Resistance came down over the last 2 days. It's come down $1 from 39.64, 38.45, 37.54. Someone wants out of this stock, and they are bringing down their offers to get out. So, I mean, keep living, using this as support, but I don't know. It just seems like it's starting to get a little bit heavy.
Just overhead supply. There's been in Square so much overhead supply. Every time it seems to get a pop, there's more sellers again because so many people were chasing that move all the way up. And that's why after the bubble burst, and we'll call Square a bubble, for the last $10, that 40 to 50 was ridiculous. And it didn't take much for it to go down. After they burst, you have all those people who are like the Johnny-come-latelys, believers in the party. So every time it starts to pop up, these guys are like, oh, lightening up, because they're puking every night. They're going to bed thinking about Square. I bought it at $45 and it's at $35 and it's bothering them. That's why I don't chase stocks. I don't like that, and buying other people's profits. But, regardless here, when the bubbles burst, they stay down for a while. And you've got to shake all those people out. You got to, turn over, get stronger hands, then start breaking out for the stocks to go higher. You can't get interested in Square, in my opinion, until you get some closes above 40. You have all those tops up there. Yeah, maybe there's some room for 37 to 40 there, but it's all risk reward. There's room to the downside here as well. I just don't see a good setup here. It starts getting a run, starts getting back up over 40, then it gets interesting again.
All right. And so we got 824 here. S&Ps are a little bit on fire. Up 9, 64, 65 even. That's a high print of the session. Got 69.25. That's an all-time closing high from Wednesday. Dennis, are you seeing? What are you seeing here? We're getting a question from the YouTube. How does quad witching affect trading? We got to wait for maybe the buying balances or the imbalances to answer that question, Dennis. Or did you want to?
Well, it's just okay. So what's there's gonna be two. The major factor which we already talked about just at the beginning of the show. If you want to rewind the show, you can hit it. It's basically at the end of the day, you have institutions with jockeying positions, their futures positions, their stock positions, their option positions, all against each other, and they might be selling stocks against their options. So you're going to see some major institutional action at the close. You also see it on the open. You see a lot of institutional action on the open. That's why imbalances are, for the most part, very difficult to use on the opening ones, because there's so many institutions that are being at the open as well. So you could have something that shows like a 50,000 share buy imbalance, and then boom, Fidelity comes in, last second and sells 100. Now it goes from 50 to buy to 50 to sell. So big institutional action on the open and the close will push stock prices around a little bit. What we try to do as statistical arbitrage traders is take advantage of moves that are moving based just on order flow. Fundamental information goes into a stock. Stock gets upgraded, it's going up for a reason. But when you have, for instance, a stock trading and it's just trading just because or it just gaps up $1 because it's a huge buyer on the stock, that's usually a fadeable trade. Statistically speaking, that stock will often come back in, because usually those just basic, one big fish pushing a stock price out to lunch will usually, come back in. So, historically, the way we play them is, a big, stock is running up on the close, gaps up into the close, we short it. And stock, running down the close, gaps down the close, and, we buy it. Other things being equal, I don't want to be trading those on news and different things. If there's a reason for the move, then I'm not interested. When there's no reason for the move and it's just based on order flow, those are the ones you historically want to trade. That being said, there is, like I've said, the last couple of years, it's kind of in crickets. High frequency trading, a lot to do with that. Their profit margins, they get in there and they really thicken stuff up as well at the close too. So, and institutions, are all, doing different things, so it's not like it used to be. There's not these wild fireworks like there used to. The odd day there is, but for the most part, a lot of times they seem like normal days lately. But you always got to be prepared, because sometimes it seems like at least once a year you get a wild close or something on an option expiration, especially on the triple wedge.
Question about the Visa print from yesterday. This is, I can't feel my Facebook. Hey guys, could you explain the 4.22 million shares in V at the bell? It took it right down and messed up the close. Dennis, do you have that coming as a cross, or was that actually a real print?
You're talking the 4 o'clock close?
Well, on the 4 o'clock close, I see.
I did not notice Visa trading action. I look at the chart, I don't see much there either. So, I can go and download what the closing print was.
You said at the bell. At the bell. That could be the open or the close.
Well, if it's at the bell, but I don't see like sometimes you'll see a big gap down or a gap up on the close. And, and that's just, order flow, happening as well. But, it's a big buyer, a big seller at the close. But I don't see a gap even on the chart. So, if they want to ask the user what price that was at, but I don't see really, where
might have
the
just been a cross.
Do you see the big move on Visa?
No, I don't. It just must have been off the exchange. So, okay.
I'll tell you want to see fireworks, bring up TMUSP. This thing was wild right before the close, had a flash crash. So this is a preferred convertible stock of T-Mobile. And this thing went into sell-off mode hard at the end of the day, and then had a flash crash. If you look at the chart, TMUSP down to $92.28. You might not see that on your chart and now, because I have stuff on my charts because it's downloading the data from yesterday. They busted all the trades under 97.70 or something. So if your software is already adjusted for the bus, it might show the low, only at 97.70. But believe me, it traded down 92.28. So anybody buying below that, whatever that bus price, I don't have it in front of me. I think it was around 97.70. All those people today are coming in saying, whoa, why do I own T-Mobile again? All of a sudden, or why am I short T-Mobile? Because their buys got busted.
Oh, okay.
So,
all right.
That was wild. That was a wild move. So, and sometimes you see these wild moves happen.
I mean,
other question from the chat, just for grabbing all the questions. Page and Juan's asking, why is the SPY up? And then he's suspecting dividend. He is correct. All the spiders are ex-dividend here today. So this is your quarterly dividends for the spiders. So remember, you've got to do the adjustments. So SPY closed at $265.66, but it paid a dividend of $1.23. So you got to knock that off the price, which gives you an adjusted close of $264.31. So actually today we're trading $265.20. We're actually trading up 89 cents. So if you're looking at any of your spider ETFs, they are all ex-dividend. Don't mess that up, because if you think, I'm buying something on the cheap, you may not be buying something on the cheap if you don't consider that you have the dividend has been paid.
All right, Chris F is seeing that Visa as a cross here. Ding, ding, ding. 8:30 imbalances. We got to see. There has to be buy imbalances out here, Dennis.
Again, so they're all huge sell imbalances. It's not going to last. Yeah, but you can't. Okay, so one day I look at the opening balances every day. On the third Friday of the month, the opening balance data is almost useless until like 10 seconds before the open. Because just because Bank of America is showing me 2.5 million to sell right now doesn't mean it's going to open down. There's going to be so many big buyers that come in. That's not a fake order. It's just an early institutional order. There's going to be a lot more institutions that come in on the open here. So institutions typically don't trade on the open anymore, except for the third Friday of the month. That's when they know other institutions are going to be there as well. And that's when they are jockeying stocks against the options. So a lot of times, sometimes you see some fireworks. Sometimes you actually see a stock open down that shouldn't open down. So it's not that you should completely ignore the data, but it's not as trustworthy as it is on the other days of the month. So if you would see Bank of America just all of a sudden pop in with 2.5 million selling balance on a normal day, every trader's hitting it. But they all know the same thing. Anybody, who uses that data on a regular basis knows third Friday of the month, 2.5 million isn't that much, considering it's going to be some more institutional action that's going to come in. Am I going to sell, Bank of America down right now when the S&Ps are trading up 9 points? Probably not. So right now, if you just want me to give them to you, though, there's a lot of selling balance across the board, and they're big. That's going to change. It's going to change, even by the time we're done the show, those numbers are going to change significantly. Wells Fargo, 1.1 million to sell. I'm looking at JP Morgan, 871,000 to sell. Citigroup, 698,000 to sell. Berkshire Hathaway, absolutely astronomical, or 509,000 to sell. All going to change. So don't, put a lot of trust in that data on the third Friday of the month.
Muted. 64 and a quarter. SPOO's up 8 and a quarter. 65 and a quarter. That's your high. Adobe. How's Adobe doing?
ADBE, our Bravo Echo is, how did it do, Spencer?
$1.26 versus $1.16. Sales of 2.01 versus $1.95 billion. So beat on the EPS, a beat on the sales. They're also raising their fiscal year 18 revenue target. Q1 adjusted EPS. This is now guidance. $1.27 versus $1.24 was the estimate.
Stock trading up 4 points here in the pre-market, so it's a pretty good move here up for Adobe. It was up more than that, wasn't it?
It went to 183.05, big old range from 171 to 183.05, settling in here at 176.83, still up. Excuse me. I'm getting a different print here in Adobe. Why am I seeing this? I don't have the pre-market chart up. Okay, 178.71. Dennis, what are you getting for the last print in Adobe?
Adobe right now is trading at, let me just go. I was actually trying to just go grab the tape for, oh no, 160, that's a cross. 160, 20,000 shares. That's no good. Strike that from the tape. It's 178.71 is the last trade, the trade on the exchange.
Okay.
When we see these FINRA trades, a lot of times those are just institutional crosses that are from, maybe late reported from yesterday. It could be today, but that's not trading in the active market right now.
All right. So throw out the high, throw out the low. I'll look at 180.62. That was your December 4th high. You did blow it away by a few bucks, but you have come off. So if there's a target, 180.62. And then what is the all-time high here? The all-time high you could keep an eye on. Ooh, that's way up there. 186.27. But let's look at 180.62. And then a pair of lows around 182 potential resistance levels. Coming back on the downside here with Adobe. Trading at the close was down at 175 even. Gap fill at 78.72. So let's see if it just holds that old resistance. Let's see if it turns out to be new support.
I'm looking at that Visa tape again. So I see all these 1292 trades you're talking about. Those were all FINRA crosses as well. I'm trying to hunt down the closing print, though, which would be on NYSE. And I'm not, for whatever reason, seeing the close on the NYSE, which is weird on the tape. I'm just looking to look farther here. We're just digging in here because user in the chat was curious what the Visa closed. I have to keep digging here. I don't see a closing print on the NYSE, which is weird. Anyways, it would appear that the closing print was at 112.92, but it wasn't. Well, it was, yeah. So Visa did gap down 40 cents in the closing print. So I don't know why I don't see that there. But anyways, yeah, it looks like Visa gap down 40 cents in the closing print. So there was a little gap in the chart. Stock's coming back up, though, at least right now. So I do see that. I can't feel my Facebook. We're talking to.
All right. Was there was another earnings, right? There's three. We did Costco.
Well, Jabil Circuit, JBL.
Right. Okay. Or there was 4. That was the one. That was the last one. Right.
Yeah. Give us stable numbers.
80-cent EPS versus 79-cent estimate. So a beat by 1 penny. Sales of 5.6 versus $5.5 billion. So a beat on both barely on the sales and the EPS. Q2 guidance, EPS coming in line, sales coming in higher than the estimate.
What do you think of this one? This is a stock that has not participated really with the tech rally. I mean, okay, I guess it has. I guess it's not entirely true. It has kind of went up here. It's just, I guess when you put it in perspective, 25, 27, it's been such a good year for tech that you look at this one and you think, man, even though it's up on the year, it's still been a pretty crappy year here considering, you have Micron, Applied Materials, some of these older tech stocks have doubled. This one started the year around 24, 25 bucks and was at 27 and a half. I mean, it has not been nearly the move of some of these other ones. What are your thoughts here when you look at this chart?
Well, let's look at the pre-market chart. And I mean, it's near the recent lows of the move, so that's not a good thing. 15-minute chart, you got a little pop, and I'm just going to go to the daily on this one. And to me, it's all about 29 bucks. I mean, you cleared 29 bucks, and this thing is good to go. You've had a seller at $29 on 3 different occasions. And I could give you those exact prices here as I pull them up on my other platform. Man, more than that. Going back to November 29th, let me give you some highs. 29.06, 28.98, 29.03. All right. And then 29.01 on Wednesday. So there you go. You clear 29. This thing is good to go. Maybe test the $30 area. Don't like the bar from yesterday. That was kind of street lean the wrong way. 27, 29, the low of the move. It takes that out. You got to go.
All right. Move away from the earnings stocks here for a second. Let's go to the ratings land. Actually, before we go to ratings land, let's go to these shippers. Some people like to trade these little crazy dry shippers there. And today we got some news in Diana container ships. And it's trading up 43%. If I go to my leaderboard here, it's number 4. Of all the stocks that are basically listed on the U.S. It's up 43%. DCIX. Spencer, what are the details here?
Hold on, I was distracted. I was responding
to DCIX. We're talking about Morgan Stanley position.
I was responding to an email. We potentially could get.
What do you mean you're responding to an email? You're on my live radio show.
Listen, we potentially could get Gordon Johnson on the show in the next 8
Oh, okay. You're working with Gordon.
Okay.
We forgive you. We forgive you.
Diana Container Ships is up this morning off a 5.3% passive stake by Morgan Stanley.
So stake comes in, DCIX. We know this DCIX party that this thing had, and if we just go to the dailies, you can see it on the chart. Back in November, this thing went from like $1.56 up to, was it $30 or something like that, $28.48. Come all the way back down. So it's giving a little life here again. These things are wild when they start going. Now it's already win. I don't know if I'm chasing it here or not. Give some technicals here, and then we can look at what the other ones are doing.
Let's see. DCIX trading up in the pre-market, 43%. 7 even was your print. Your high, I'm just going to give you 740. That's your pre-market high. It takes that out. It keeps going. Not sure we're going to see the all-time high today. The all-time high is 753,228.
These shippers with the reverse splits.
I don't trade them. I don't look at them. I really don't care.
Okay, so Morgan Stanley giving it a vote of confidence, taking a pass. How big was the position?
5.3%.
What's the market cap of this thing? I want to know what kind of position this is for Morgan Stanley. I go look too.
Market cap is $5.323 million. Million.
So they take a 5% stake in a $5 million company. That's
ridiculous.
What are we talking? That's almost nothing. Okay, I don't even care about that stake now. So vote of confidence here. But that being said, lots of overhead supply. Everybody's been beat up on this thing in the last month. It's been drifting down. A 5% stake, whoop-de-doo-dah day. If that's really the case, that it's only got a $5 million market cap, you're talking about no money at all. So I think I'm fading the pop.
I don't even like to.
If I can fade the pop, if you can even borrow that thing. Sometimes you can even borrow these things. Fade in the pop.
All right. What are the other ones?
Joel's flabbergasted.
I just don't.
The Morgan Stanley would, throw a couple $100,000 in something.
Yeah.
Sounds like absolutely
It's
nothing.
not news. I mean,
yeah, and it's up 43% because Morgan Stanley takes a $300,000 position, and that's absolutely ridiculous. I can't believe that either, Joel. Okay, so if that's really the market cap, that's ridiculous. So other stocks that are moving off of this big Morgan Stanley position. Dry ships, DRYS is up a little bit here. I tried to play this thing a couple of times. I said I wouldn't talk about it on the show anymore, and here I am. I was trading my investment portfolio, or not investment, my trading portfolio there a few days ago. But this thing, just it looked like it's getting interesting. Maybe it's going to pop up, but no, it's not. So I got rid of it. It's popping a little bit here this morning. It's up 12 cents. Tops is another one. TOPS. It's up 10%, but don't get too excited. That's only a 3-cent move for that 30-cent stock. GLBS is another one. It's trading up 9 cents. SHIP is trading up 3 cents. So, okay, big move DCIX, but the other ones aren't really moving that much, and that is just not a big position. So I'm a fader of the DCIX pop, I think.
Morgan probably sold some of their Bitcoins and needed to put the money somewhere, so they decided to put it into this issue. News on CSX. That stock's having some problems today,
CSX.
What's going on in CSX?
Yeah, the CEO, Hunter Harrison, who, if you recall, I think he joined earlier this year. He's taken medical leave. That's the news this morning. Is that and I believe I'm gonna look back into Pro because I think he's. Didn't they poach him from somewhere? I vaguely.
He came from another company.
I vaguely remember
that guy. It really pumped up the stock on it.
You got crushed on it, Dennis. I remember.
Yeah, I was short, and I was like, how is this guy worth that much money?
Yep.
I was wrong. He's worth a lot of money. So maybe I shouldn't be coming here and buying it when he's sick because I'll get crushed again. I don't know. That seems like a ridiculous move, though, for a CEO sick. No?
That's
12% down now?
I know.
I almost look at my chops at this thing at $48. Maybe throw some of them. Well, I got to look monthlies. I have to go. And when I go on my invest portfolio, you got to do valuation and stuff. But wow. You talk about a stock that's been hot, and all of a sudden, boom, you get slammed for 12%. I guess the CEO is pretty good, and he's taking medical leave, so maybe, I don't know. We don't know if he's going to be back or not. So maybe that is a major issue here for CSX.
I believe
it appears to be a major issue.
If memory serves, I think he was an activist investor, and then he became CEO. I think that's what happened.
Really? Anyways, we're at $50 here. That's big psychological level. Joel, thoughts on CSX? Are you buying this pullback?
No. I mean, it's going down. It's not going down as much as
what's the low?
Yeah, it's starting to hold in here at 50. It's a psych level, but
low?
Yeah, right here, right now, 50.11. Dennis, doesn't look like there's someone still has their foot on it. If you really want to hold out for a target, look in the lower 48 handle. You mentioned that right off the hop. 48.26, 48.34. Another double bottom. 48 a lot. I mean, the cover is short.
Catch a falling knife, but man, that 48 looks like it's a level it could bounce off of.
All right, I agree, and it doesn't look like the sellers let up yet. Let's see if we get a little bounce at $48.
Remember, we're pressing this because Pier 1 Imports yesterday on the show, we're like, that $4 is huge. It could bounce. I did. We called the bottom, me and Joel. $4 on the kisser.
That was a tough call, Dennis.
401, I guess.
Yeah.
Well, I think still money, even if the easy ones are. This one's the same thing. It's setting up by a lot of volume here going on. But setting up that 48, that 48 looks big.
I do.
I don't know if we can get through 50. Maybe buyers come in here before we even get close to that. But if it got down to that 48, man, that looks like a nice level. Licking my chops.
All right. We'll see. We will note that in the pre-market technical doc. Major support. I mean, what do you have? 4, 5, 6 lows at that $48 area going back to August. So getting some long-term support here.
I think it was Spencer in the chat talking about Under Armour. Let's go to ratings. So we got Under Armour getting upgraded at Stifel here today. UA has been the one retailer that really hasn't rallied. So, and maybe this is a laggard call from Stifel. I believe they put a $17 price target on it. UA, you can also pick your poison because they got the double listing UAA. Both of those stocks are trading up above 4.5% on the Stifel upgrade. Thoughts on a retailer and looking at this one? And you know what? I was looking at this chart for a while here and thinking about throwing it in the swing portfolio just because it was a retailer that hadn't rallied yet. And I would have been happy if I did that. So I did not do that, though.
I don't know if I could really put a lot of faith in this one. I mean, I I did buy a pair of Under Armour shorts, and I'm not real happy with
Under Armour stuff.
Yeah, it's not. I mean, you're gapping into a gap area here. Kind of built. I mean, JC would say, "Hey, built on a nice base here, 1140." You know that you're out there, right? If it takes it out, we're trading $3 above that. I don't know. I mean, you could. I wouldn't be shorting it here. Let's see what the pre-market high is. 1465 is your pre-market high. Let's see where the gap area is in UAA. That's the one you trade most, Dennis, right? Or if
they both trade. You can pick either one. They're both very active. So even this morning, 53,000 versus 75,000. So they're both very active here.
Filling a gap up to, I mean, you got to go all the way to fill the gap. You had a gap down 1444. You're filling that. You're starting to fill that gap. You had a real bad day when you dropped from 1641 down to 1252. The high on that day was 1444. So you need 1444 up to 1553 to fill the gap in UAA.
There's another rating I want to hit on, and that is CSIQ catching a downgrade this morning from one Gordon Johnson. We're actually going to call Gordon right now and get him on the show on the fly and have him explain that rating to us. Gordon Johnson.
Gordon Johnson.
Hey, Gordon, how's it going? You're live on Benzinga's Pre-Market Prep. How's your morning?
Good, gentlemen. Thanks.
Good. Thanks for joining us on such short notice. So, Gordon Johnson, Managing Director of Axiom Capital. Gordon, you've been one of our favorite, if not our favorite, solar analysts now for a while. Explain your downgrade this morning from buy to hold in CSIQ.
Yeah. So the downgrade of CSIQ, it's a tough one because we really like the long-term story. But as we have experience with some of the solar companies we look at, in valuing projects that have not yet been sold, there's a lot of assumptions that need to be made. And based on the assumptions we were previously making for Canadian Solar, we were getting a fair value for those, essentially their project portfolio of around, $26 a share. And, we recently met with the company. The meetings went well. We were very encouraged by the meetings. And, the CEO subsequently, we did the meetings with the CFO. The CEO subsequently came out with a take private offer at $18.47. So there's a number of ways to take this, but I think just at anecdotally, the way that we take it is that the CEO is telling us that we were being a bit aggressive on our valuation approach. In addition to that, included in CSIQ's 4Q numbers is the sale of a number of projects to Korean Electric Power, KEPCO. And that is a significant amount of revenue and EPS. And it's now December 15th, and we haven't gotten confirmation that CFIUS has approved that project sale. So again, this could happen before year end, but given that, Congress is about to go on break, I don't think that, we think there's a low probability that CFIUS, a lower probability rather, that CFIUS approves these projects before year end. So if that does not happen, we believe that there's going to be a significant cut to Canadian Solar's 4Q revenue and EPS. Now, clearly that's backward looking. And if you're a bull, which in general we are on the stock, you could argue that the projects will be sold in 2018. And we don't necessarily disagree with that. But these projects, I think a lot of people were expecting to be sold in Q3, and they've been pushed to Q4. Now they may be pushed to Q1. So there will be some risk on the other side that, some guys start to question when are they going to sell these projects. In addition to that, we now think there's risk to the sale of the portfolio of projects that Canadian Solar is looking to sell to Shenzhen, which is a Chinese company. We think it's going to be hard to get CFIUS with Trump, Mnuchin, and McMaster's making the decision to approve that. So we like the long-term story. We think Canadian has a great management team, and there is a take private offer at $18.47. But there's risk near term. And you also have to keep in mind that while Trina Solar did, they announced a take private offer at $11, I think $11.60, and it closed at that price. JA Solar announced a take private offer initially at $9.69, and they later lowered the offer to $7.55 and didn't close the deal until 2 years later. So the point is that it's not a guarantee that the price that Canadian Solar CEO offered is the price at which this deal is going to close. That's not the main impetus for our going to the sideline. You guys know we have a negative bias on solar, so we're not saying sell the stock. What we're saying is hold. But we do believe there's some near-term risks, and that's why we're stepping to the sideline.
So this 1847 offer, the way I own CSIQ actually just because of you, Gordo. I threw it in my investment portfolio. But I'm looking at this 1847, price and thinking, okay, well, is he going to get it first of all? Because obviously it's got to go to the board and they got to vote on it. But doesn't that kind of put a little bit of a floor under the stock temporarily, or maybe not if you think?
Yeah. I mean, we think so. Yeah. I mean, I think that does put a floor on the stock. However, and again, not that I agree with this, but if the company comes out and reports 4Q numbers that essentially are half of what the street is modeling, we think, the street's at 1.7 billion in revenue. If they don't sell the Shenzhen assets, it's going to be 1 billion. The street's at like $1.04 in earnings for Q4. If they don't do that, we think the earnings are going to be closer to 57 cents. If they cut revenue and earnings by 50% and the street has to lower their numbers across the board, the question is, will the stock come under some pressure? And, is it going to go to 15? Unlikely, but, could it go a little lower? Potentially. And at 1770, which is essentially where the stock is today, 1847 is just 4% upside.
Yeah. So
while there's a floor, I think while there's a floor, I think there's also a ceiling on the stock. And if this deal were to fall apart, if the board didn't approve, there's significant pushback in the investment community. But if this deal were to fall apart and the board didn't approve, I think the floor on the stock would come out, as well as the potential ceiling. But we just see a number of near-term risks to the stock. You can hold the stock, and if you're willing to hold it for a year, I think you're fine, because I think next year has bright things for them. But again, if the CEO of the company, who really is the gate holder and the key holder to this company, believes that 1847 is the right price for U.S. shareholders, that would suggest our $26 price target was a bit inflated.
Jump over to a couple of other ratings here. You cover U.S. Steel, and U.S. Steel has been on a run. X has actually just pulled back the last couple of days, but ran from 26 to 34.
Right after our downgrade.
What are your thoughts? Yeah.
So listen, if you look at the steel stocks, they've underperformed this year across the board. Even X, with the recent, magnificent run, is still down year to date. And I think the issue is, for us, near term, the reason why we got out of the way for now is because you have a Section 232 case that is going to be determined by January 15th, 2018. Trump is going to make a decision. You have what we believe could be, or we thought could be, self-initiated cases by Wilbur Ross against a number of different potential items, or still self-initiated cases. We saw the Vietnam circumvention decision came back in favor of the steel mills. So effectively protectionism. And the other thing too is that, U.S. Steel has changed their accounting. And effectively, the accounting now allows them to capitalize expenses they were previously including on their income statement to the balance sheet. So effectively, when looking at EBITDA this year for U.S. Steel, they're guiding on $1.075 billion. That includes $275 million of expenses they effectively took off their income statement. So it's not an apples-to-apples comparison to prior years, but the street doesn't care. And apparently neither do investors. They're putting a multiple on that EBITDA. So if U.S. Steel wants, they can give very aggressive guidance for 2018. And in 2018, they don't. Right now, they tell you what the essential accounting adjustment is on a quarterly basis. But in 2018, they don't have to do that, because they're effectively, then you are looking at like-for-like comparisons. So the point is, the key with U.S. Steel, in our view, is looking at their free cash flow. And their free cash flow, this year is the street is modeling it down 50% versus last year. Yet it seems like investors don't care about that dynamic right now. We think they eventually will, and we think there's problems in the U.S. steel industry. The reason why we think imports are weak right now is because demand for for steel in the United States is weak. And keep in mind, while imports are down, if you look at the ramps of capacity by Acero Junction and Big River Steel in the United States, these are new steel mills. That ramp in capacity more than offsets the decline in imports into the United States. So we still think there's fundamental headwinds. We think there's weakness coming in the Chinese market, which is the most important market. But we're just temporarily stepping out of the way. We want to get clarity on this Section 232 case, which again we'll get by January 15th. And I think then we'll be in a better position to reevaluate kind of how we feel on the stock. But if the 232 comes out significantly in favor of the steel mills, to have a sell rating on a still stocks, you could get hurt. So that's essentially kind of where we're at there.
Gordon, just want to ask you one more stock. First Solar, this thing has just been ripping. Hit 71.80 the other day. Any comments? Straight up, added 20 points here, just over in the last month and a half. And so, any thoughts here on First Solar?
We have a buy rating. We've liked it for a while. It's been a high flyer. The performance has been stellar. Keep in mind that, First Solar's plan was to essentially ramp down Series 4, ramp up Series 6, spend, 500 to 600 million in CapEx to ramp up Series 6. And, they were probably going to go through a year or two of weak earnings. And then they got a gift in the form of this Section 201 case. They ramped back up Series 4, and they've benefited. But the stock has benefited too. The stock has went from below 30 to 70. So we still have a buy rating on the stock. So that's our official recommendation. It's been a high flyer. So I'll leave it at that for now.
And we have a buy rating on Gordon Johnson, the managing director for Axiom Capital, joining us here on the hop. We really appreciate it. Great insight. You say what's on your mind. You do the research. We can't appreciate you enough coming on the show. Gordon Johnson, Axiom Capital. We'll speak to you again soon.
Thanks, guys.
All right. 8:57. Great job, Spencer. Let's give Spencer a hand.
If I could recap, I was trying to take notes as fast as I can, but he's a very fast talker, and there's very dense answers he gives. Oh God, let me just try to read through some of these notes right now. So CSIQ, his main thing was that, excuse me, he still likes the long-term story. They had a lot of
the upside isn't as much as he thought.
Right, the upside isn't as much,
especially if it goes out at 1850.
Exactly, and he did say a floor of $15 for CSIQ. X, US Steel, what did he say? If they want, they can give very aggressive guidance for 2018. The key for us is free cash flow. That's what he said about US Steel. First Solar, high flyer. I mean, that one pretty much speaks for itself, I think, that chart. But so that was. But we'll have a recap article on benzinga.com in a few moments after the show, as fast as we can get it, because his answers are very dense.
Great info. I tell you, I follow him, and then he's not as widely followed as some of the other analysts out there, but he makes some great calls. I mean, he was giving us First Solar under $50 here on the show, multiple times, and obviously it's up there at 67. He gave us CSIQ. I bought it the first time he had upgraded CSIQ, which was back at 13, and that was I'd say early 2017, and that's been a good one too. So CSIQ has been a good one. He's got good calls, man.
Yeah, and he's just excellent speaker.
Does his homework and he knows what's going on.
All right, 8:58. S&P's had that spike to 65.25. We have backed off then, getting a lot back of yesterday's losses. They messing with those imbalances at all here?
They're still selling balances. Buy is not coming in because they know they're going to flip to buy imbalance. They're all selling balances for the most part right now. Very few buy imbalances. But again, I think you're going to see that change in the next half an hour before the open. If it doesn't, then the SPY is going to come in a hurry in that last minute. But as of right now, there is a few buy imbalances popping up. It's actually, a theme going on here. And again, this information is going to change. So, but as I'm looking right now, so the defensive issues are getting bid here a little bit. Procter & Gamble, 300,000 to buy. Coke, 500,000 to buy. Pepsi, 220,000 to buy. Kroger, there's 100,000 to buy. Philip Morris, 316 to buy. Mo, 215,000 to buy. SO, which is a utility, 209,000 to buy. Seeing all that, and then looking over here though at all these other stocks, which are like my financials and your industrials. So it's like somebody's putting on a defensive portfolio or something, the defensive orders here, because they're buying all the defensive bond-like stocks and they're selling all the equities. That's what I'm seeing so far. But now you're going to have other institutions that are going to come in and offset that, so things are going to change. But defense is the name of the game for this institution that's got their orders out there right now.
All right. Just real quickly here, on Tuesday, we're not going to have our regular show. We're going to be devoting 1 hour, maybe an hour and a half to cryptocurrencies, discussing the Bitcoin rally, the impact of the futures coming in on the markets. Our frequent and friendly guest, Jeff Goldman, will be joining us. We have an academic and Jim Angel from Georgetown University. Michael Grubb, a local investor in Bitcoin, a guy that's taught me a lot about the fundamentals, will be joining us. Also, Michael Sonnenschein, and he is managing director at Grayscale, the manager of the ETF, GBTC. Your old buddy, Joe Saluzzi, will be joining us to talk market structure. And the name of the guest that we added yesterday, Spencer, Chris Biglio?
Yep, Biglio. He is with the company SRAX as the ticker. Social Reality is the name of the company. They're a small cap, and they invented their own blockchain. So he'll bring a more of a blockchain perspective than purely Bitcoin, because there's more to Bitcoin than just Bitcoin itself. It's also the technology that undermines the currency. So he'll be able to talk about that technology. You can be a believer in blockchain and not a believer in Bitcoin, or vice versa, I suppose. So he'll bring that perspective to the show on Tuesday. I just put the link in the pre-market chat. If you want to register for the webinar for the show on Tuesday, you can do that. I'm putting it in the YouTube chat as well. There it is. And yep, so looking forward to that. But we still have a show Monday coming up between now and then. And if you want to catch any show from ever on Pre-Market Prep, you can do that on our podcast on iTunes, SoundCloud, and Stitcher, or go to youtube.com/BenzingaTV. Thank you to Gordon Johnson for coming on super last minute this morning. Thank you to those of you who chatted with us at premarket.benzinga.com. Thanks to those of you who listened on YouTube as well. Joel, what's up?
I forgot to mention Peter Schiff will be coming on.
Peter Schiff.
I hope he's not listening.
Oh,
no, he'll be coming on from 9:10 to 9:30. He did a great podcast that Dennis sent to me. So we will have him on near the end. So just a great lineup. We are going to be busy putting on a good show, trying to give you guys information about Bitcoin, other cryptocurrencies, blockchain, futures, market structure, and academic view. Will be your most well-rounded and well-versed show on Bitcoin.
So we hope. That's it for us today, folks. Have a good rest of your day. Have a good weekend, too. And I hope you join us again on Monday.